Hello guys, welcome to another educational episode on Clip Option. In today's episode, I'm going to be introducing you to support and resistance trading. What is support and resistance, how to use support and resistance properly, and how to trade with support and resistance. Support and resistance is a key concept in technical analysis that is used by traders to identify potential levels. It can also be used to look out for potential reversal points. These levels are determined based on past price movements and can serve as important reference points in making trading decisions. Support and resistance can actually be used in trading different types of commodities, currencies, or in any financial market. Now, what is support in trading? Support refers to a price level at which buying pressure is expected to be strong enough to prevent price from falling further. Also, what is resistance trading? Resistance is a price level at which strong selling pressure is expected to prevent price from rising further. Now, looking at my screen, you would actually see that I already have some examples of support zone and resistance zone. When we talk about a support zone, it just means that it is a particular price level that prevents price from falling further. More like we have a very strong demand at that particular zone, whereby buyers are always looking at that point to buy from that point or to take out sellers from the market. Looking at this particular support zone, what you should expect is that when price consecutively comes to this particular point, we expect that the next time price comes into that point, we tap on it and push to the upside again. Same thing applies for that of resistance zone. When price is dropping or price is pushing to the upside, when price gets to that particular level, we have a very strong supply at that zone, whereby we have a lot of pending orders at that zone that takes out buyers from the market and sellers come into the market and start dropping the prices lower. Moving further, we have how to draw your support and resistance line. Now, drawing your support and resistance line is something very simple that you can actually look out for in the market, or something simple than any other strategy that you can think of. Now, in drawing your support and resistance, we have different types of ways or markets in which you can apply your support and resistance. Now, when we talk about the trending market is just talking about or consists of the bullish and bearish market. When we talk about bullish market, it's just telling us that we have price pushing to the upside, or we have a strong buying pressure in the market. Now, when we are talking about the bearish market, it just means we have price in a downtrend, when price is falling and we have sellers taking over the buyers. Now, in drawing your support and resistance in the trending market, all you have to do is to connect the most recent swing points. Now, in a trending market, either bullish or bearish, we have what we call swing point, which is the higher highs and the higher lows in the market. Now, when we are drawing the trendline resistance, all we have to do is to connect the swing points. In connecting the swing points, we need to connect two most recent swing points. And now, when we connect these two most recent swing points, we can be looking at the third swing points that will be forming. That okay, that particular point is where we'll have another selling pressure from. Looking at this, you see that price has tapped into this trend line resistance the first time, and it dropped. It pushed into it the second time, it also dropped. Now, all you should be expecting is that the next time price will get to that particular level of that trend line, we will also have that price will drop from that particular point, and that is how it works. Now, if you are actually looking to trade this trend line resistance, all you have to do is that when you draw this particular trend line on your screen, you should always follow the trend line, because when price taps into it the first time, the second time, all you have to do is to open your short position from that particular point. Opening your short position, you will have to wait for it. Let's use this example. When you have your short position at this point, what would you do? You wait for it patiently for price to come back into that particular zone. Now, where would you place your stop loss? you place your stop loss a little bit above the trend line resistance. Then all you have to do is just to wait patiently, and price will come into that level, tap on that trend line and drop. And that is how to trade the trend line resistance. Now, talking about the trend line support, we have it as something of this nature, where we have an uptrend, price coming the first time and the second time. Now, when you have this, what do you have to do? Connecting the two most recent swing points. Connecting it this way, you actually have something of this nature. When you have something of this nature, you would know that this particular point is a reference point, and the next time we have price coming into it, we'll have a very strong buying pressure to the upside. Then what do you have to do? Opening a long position from that particular point and having your stop loss a little bit below the support, and that is how it works. Then we have price coming into that zone, pushing to the upside, and that is how it works. Now we have the second way of drawing our support and resistance, which occurs in the ranging market. Now when we are talking about a ranging market, this is just telling us that we have a stagnation in price, whereby we don't have an uptrend or we don't have a downtrend. Price is just at a particular point accumulating. Now when we have something like this, all we have to do is just to draw your trend line at the highs and lows of that particular range, drawing your support and resistance at the highs and lows of that particular range, and that is how it works. When you draw your trend line at the highs and lows of that range, then when price comes into the support level, all you have to do is that you open your long position and target the next range high, the high of the next range, and you wait patiently, and price will actually do the same. This support and resistance works very perfectly in any currency, any pair of your choice. All you have to do is just to know how to trade them. Moving on, I'll be showing you some chart examples on how to trade support and resistance. First, we will be starting with the trending market support and resistance, whereby we use the trend line support and resistance. Looking at this, I'll be pointing out some examples and showing you how. At this point, when we talk about trendline support, you actually see that we have this particular point from this point. We have the first touch and the second touch. When we have the first touch and the second touch of this same point, we'll be expecting that when price comes to that point the next time, we'll have a massive movement to the upside, because the reference point and a lot of traders looking to buy from that particular point. All you have to do at this point is open your long position from this point, then you have your stop loss below that particular level or a particular below your support. Something of this nature target the next high. You will not need to target it, but all you have to do is just target when price comes into that level, you have a website. Look at how it is called at this particular level. When price goes into that point, look at the huge movement you have. It means you have a lot of traders that are already having a trading order at that particular level. Now let's get to another now you expect that first time that price comes to a particular zone, you have push up from that particular zone. But now, why is it's advised that you have your stop loss a little bit wider. Now when you have a trade like this and you're expecting that when price comes into that level, we'll have a massive push to the upside. Look at what happened here. Let's say for example you have your stop loss very small at this level. You might already be taking out before we have this. Let's say for example you have a very small stop loss and you are targeting this particular level. You can see that at this point we already have price taking out your stop loss. So it's always advised that you have your stop loss a little bit open, and when price comes into this level, see what happens. You have a massive push to the upside, and that is how to draw your trendline support. You can check for other examples on your chart and see how it works. Now look at another example. You have the first touch, the second touch. When you see this, just draw your trendline and wait patiently. All you have to do is to draw or open your long position at this particular zone and wait patiently. But before then, you have to set target. You have to set your target and you have stop loss at the end. Now look at what happens after we have the first touch, the second touch, and you draw your trend line and patiently try to go to the upside and you have passed into that trend line support. Now let's quickly look at the trend line resistance and we see how the trend line resistance works out. Trend line resistance also works like trend line support. All you have to do is just to draw out your trend line and now have another example. First thought, second thought, you have price coming in first time rejecting, second time you have to stand. All you have to do is just to draw out trend line connecting first point, second point, and you open your short position at the third point, then targeting lower prices, then having your stop loss a little bit ahead of the resistance, and that is how it works. Now when we are talking about the horizontal support and resistance, it's a little bit simpler than the trend line support and resistance, because we actually said it occurs in a ranging market where you have price being stagnant, where you have something like this, meaning you connect the highs and lows. So let's quickly look for a particular zone where we have this horizontal support and resistance. Now looking at this zone, we can actually call this, look at this point, we have price dropping from here, first and second. All you have to do is just to draw something of this nature out, and you open your short position at the third touch. Now look at this particular zone, you notice that we have price dropping here, dropping here. So this is the first touch, this is the second touch, and at the third touch we have price coming down, you can see, and this is how to trade it properly. Now looking at the horizontal support, this is an example of the horizontal resistance. Now looking at the horizontal support is something very simple also. This particular zone is also an horizontal resistance, this level. Also, this level is an example, because you can actually see that this place was actually a support before, price coming, bouncing up repeatedly before breaking through it and turning into a resistance. So let's quickly look for an example of the horizontal support. Let me look for a very beautiful example. Now looking at this is an example of the horizontal support. Look at this. We have price coming into this the first time and the second time. So all you have to do is just to open your box or your line there. So you open your long position and you wait patiently. Then you set your stop loss a little bit below the support level and you target the next swing high. And that is how to trade your support and resistance perfectly. So that is just it. All you have to do is just to practice this particular strategy and subscribe to our channel for more videos.